Welcome back. If you're an SEC registered investment advisor with more than $150 million in private fund assets as of 12/31, you're likely preparing to submit the Form PF, which is due by April 30th. Remember that the Form PF is a confidential filing. Here are 3 things to keep in mind when preparing your filing this year. First, know what form to expect. The SEC adopted several changes to the Form PF in the last few years. If you are an annual filer with a filing due on April 30th, you will submit your filing on the existing form and use the updated form beginning in April 2026. For most annual filers, you will not notice a difference for this year from prior years. For large PE funds, you will have several new questions to complete regarding each fund's investment strategies, fund level borrowing details, and GP and LP clawbacks, as well as a few changes and additions to existing questions. If you are a quarterly filer, any filing you submit after June 12, 2025 must be on the new form. The new quarterly large hedge fund filing will have many changes, as will the new annual form in 2026. Second item to keep in mind, use miscellaneous disclosures to your advantage. Question 4 under item C, miscellaneous, allows a free space to provide any assumptions made in responding to questions on the Form PF. Making liberal use of these sections can both help get ahead of questions on your firm's responses by the SEC, as well as to provide helpful assistance to the SEC in understanding the firm's interpretations of the new questions and potentially identify areas of future refinement of the form or possible helpful future FAQs. We recommend including disclosure to explain how you calculated reported metrics, as well as any assumptions or details regarding what information is or is not included in your response. For example, noting whether the beneficial ownership figures reported in questions 15 and 16 are based upon capital account balances or capital commitments. Third reminder, Form PF data versus Form ADV. Total assets should be calculated using the same methodology for calculating RAUM discussed in our last video. In general, the aggregate amount of assets reflected in item 3 should be the same as the total RAUM amount in item 5 of Form ADV. Net assets should be calculated using RAUM less total liabilities from the fund's balance sheet, or any liabilities reflected in an SMA client's account, for example, margin or borrowing. Be sure to compare the data you submitted on the Form ADV with what you're submitting in the Form PF. Material differences may require an other than annual update to the Form ADV and should be addressed in question 4. Immaterial differences may not require an update to the Form ADV, but should be addressed in the Form PF. If you're a VC firm that reports assets at cost, you will still need to use fair market value to calculate RAUM. That's all for Form PF reminders this year. As always, we're here to help if you need it. Stay tuned for our next video.